Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
Hello everyone. Welcome to Athena Wealth. Here we share the wisdom that empowers you to create more wealth. Warren Buffett has mentioned 10 assets that are better than cash right now. If you want to redeem a free ebook, The Warren Buffett Way, kindly watch until the end. While the market fluctuates, real estate value goes up as time passes. There are many different avenues to consider if you're interested in building wealth through real estate. Purchasing a house can be a wise financial decision because it's a functional investment. As your house increases in value, you continue to have a place to live. If you also purchase real estate for its income-generating potential as a rental property, you might consider using value-added services to help with managing your properties. However, the goal for real estate to be an appreciating asset is to hold on long-term, so that years later the value has jumped significantly. While real estate tends to appreciate over time, there is still plenty of risks involved. In 2008, there was a housing bubble that caused some intense depreciation and lots of foreclosures in the real estate market. The market did recover, but don't assume your real estate investments are 100% foolproof. Home values often outpace inflation, especially in growing cities. With traditional real estate, it can require some serious knowledge, money, time, and effort on your part to be successful. That statement is not to scare you away, but it might be something you aren't ready to dabble in quite yet. Another way to invest in real estate without buying entire buildings is through real estate investment trusts REITs. A REIT is just a pool of money that is used to purchase and sell real estate properties. These income-producing trusts provide the investor with a steady stream of dividends, typically from commercial real estate and apartment buildings. The main benefit of investing in REITs is you get to invest in large commercial properties without taking on as much financial risk as if you were to invest in physical real estate yourself. REITs are companies that own passive income-producing real estate investments and typically trade like public stocks. You choose a promising REIT and invest in your chosen amount of shares. You have a likelihood to receive dividends, and you can sell your shares at any time. Usually, the longer you wait, the more your shares have gone up in value, and the higher your profit will be. Publicly traded REITs list on major stock exchanges, and you can purchase shares through stockbrokers. Non-fungible tokens are the newest type of investing that can be similar to both baseball cards and cryptocurrencies. In short, you can think of an NFT as a digital asset. That is one of a kind that can be purchased and sold. Because of their digital nature, NFT can be many things. Digital artwork, sports highlights, and other digital assets can all appreciate. To date, the highest-selling NFT was People's Everydays, the first 5,000 days for $69 million. Investors have many reasons to buy assets that are tokenized into an NFT. Anyone can invest in an NFT. There are two ways to make money in NFT. Either you create your own NFT and sell it, or you become the trader of an NFT. Investing in tokenized assets is accessible to everyone. Asset ownership that is tokenized into an NFT can more easily and efficiently be transferred among people anywhere in the world. This means the liquidity of NFT is high enough. NFT ownership is secured by a blockchain. Using blockchain technology to digitally signify ownership can make an investor's ownership of an asset more secure. Blockchain tech can also take ownership of assets more transparently. It's an opportunity to learn more about blockchain technology. Investors can become more knowledgeable about blockchain while diversifying their portfolios by allocating a small sum to tokenized assets. You may need to own Ethereum, a kind of cryptocurrency. With most NFT sales occurring on the Ethereum platform, owning the blockchain's native currency Ethereum is often necessary to purchase an NFT. Over the last 5 years, cryptocurrencies have burst onto the scene as an asset class all their own. Cryptocurrency statistics show they've come from non-existence to a collective market capitalization of nearly $2 trillion in the last 10 years. A remarkable rise, to be sure, that represents the fastest rise of any asset class in history in terms of the magnitude of returns investors have made. But should you consider adding a position in your portfolio for cryptocurrencies? Many millennials have stated they see Bitcoin as a better risk-off asset than gold, driving a significant rise in ownership during the COVID-19 market downturn. Going forward, the rapid rise in value likely underpins a continual interest in holding at least a small position in cryptocurrencies. So, how can you begin investing in cryptocurrencies? There's no denying the risks involved with crypto investing, with the wild swings and massive capital flowing into the asset class. This is why you should only consider starting to invest with a small portion of your overall portfolio in this new investment category. Like nearly all investments, your capital is at risk and you can lose money. Before proceeding with cryptocurrency investing, make sure you understand the risks involved. Other than trading it, you can also choose to become a coin miner to get more coins, but it requires some capital to invest in powerful computers. Starting your own business can be time-consuming, stressful, and require upfront capital, and can still fail even with great execution. However, starting a business can also build your net worth and become a massive appreciating asset in the future. And there are tons of businesses you can start, especially online, that have less initial expenses but can build your income substantially. Many become wealthy through their company results or selling their business years later. Of course, multiple streams of income are where strong wealth accumulation will happen, but starting a business can be a strong asset. Businesses can be one of the most lucrative appreciating assets because of how much money they can make. Even the simplest of businesses can make thousands of dollars each month. There are plenty of profitable businesses you can start to grow your wealth, but it can take a significant amount of time and energy to reap the rewards. Therefore, you can consider taking some low-cost franchise, which may save you time and energy to plan the whole startup and marketing strategy. Fortunately, there's another way to invest in small businesses without having to do all of the work yourself by investing in peer-to-peer lending. Peer-to-peer, so-called P2P to Pascal's lending, enables individuals to obtain loans directly from other individuals, cutting out the financial institution as the middleman. Websites that facilitate lending have greatly increased their adoption as an alternative method of financing. Lending is also known as social lending or crowd lending. Lending websites connect borrowers directly to lenders. Each website sets the rates and the terms and enables the transaction. Most sites have a wide range of interest rates based on the creditworthiness of the applicant. People who wish to lend money through a P2P to Pascal's lending site need to consider the possibility that their borrowers will default on their loans, just as conventional banks do. Research on lending platforms has indicated that defaults are much more common than those facing traditional financial institutions, sometimes more than 10%. Any consumer or investor considering a lending site should also check the fees on transactions. Every site makes money differently, but fees and commissions may be charged to the lender, the borrower, or both. Like banks, the sites may charge loan origination fees, late fees, and bounced payment fees. Peer-to-peer lending is riskier than a savings account or certificate of deposit, but the interest rates are often much higher. This is because people who invest in a peer-to-peer lending site assume most of the risk, which is normally assumed by banks or other financial institutions. Commodity trading goes back centuries, even before stocks and bonds exchanged hands. 3 of the most commonly traded commodities include oil, gold, and base metals. Oil futures are a favorite of day traders and are bought and sold through brokerages that specialize in futures trading. This is volatile stuff and not for the faint of heart. Gold investors can purchase bars, coins, or jewelry and stash them in a safety deposit box. Base metals like aluminum, zinc, and copper are valuable only in huge quantities. The best way to invest in them is through the stocks of producers or ETF. Investors hoping to get into the commodity market can do so in several different ways. Commodity-hungry investors can consider investing directly in the physical commodity or indirectly by purchasing shares in commodity companies, mutual funds, or exchange-traded funds ETF. One of the biggest benefits of investing in commodities is the fact that they tend to protect investors against the effects of inflation. Generally, demand for commodities tends to be high during periods of high inflation, which pushes up prices. It's also a good bet against the US dollar. So when the greenback declines, commodity prices rise. One thing to keep in mind is that commodities tend to be much more volatile than other kinds of investments, especially funds that track a single commodity or a specific sector of the economy. If you like to look at paintings, collectible art may be an investment you should consider. When looking into building wealth, not all art investments are created equal. Additionally, fine art will most likely increase in value if a well-known artist created the piece. This applies especially to an artist who has passed away and therefore cannot release new pieces. Buying famous artwork on your own carries a high price tag and comes fraught with risk for those without knowledge of the industry. To reduce your costs and risk, you may want to consider using Masterworks or a similar platform. Masterworks allows you to purchase fractional shares of ownership of famous paintings. For example, you might have partial ownership of a painting done by Claude Monet. Masterworks expert art collectors specifically choose paintings they believe will have the highest appreciation rates and lowest risk. This is a wonderful option for people who want to invest in art, but don't know how to find private buyers on their own, or don't have the funds to purchase these costly works of art, or aren't sure how to store them properly. The minimum investment to get started through Masterworks is $1,000. It should be noted that this type of asset is illiquid and can't be sold as quickly as other appreciating assets. Some other appreciating collectible assets are wine and vintage cars. People love wine, but it can also be an appreciating asset. It's not easy to know which wine and where the value will go as there are tons of factors. But you can physically invest in wine, or you can look into another platform that makes it easier called Vinavest. You can invest in a custom wine portfolio of bottles chosen by experts, which physically store them for you. While cars are typically depreciating assets, if you know what to look for and what is in demand, classic cars can net a nice profit for you. Many factors affect prices like the overall supply, demand, and brand. A mutual fund pools cash from investors to buy stocks, bonds, or other assets. Mutual funds offer investors an inexpensive way to diversify, spreading their money across multiple investments to hedge against any single investment's losses. If you're saving for retirement or another long-term goal, mutual funds are a convenient way to get exposure to the stock market's superior investment returns without having to purchase and manage a portfolio of individual stocks. Some funds limit the scope of their investments to companies that fit certain criteria, such as technology companies in the biotech industry or corporations that pay high dividends. That allows you to focus on certain investing niches. Mutual funds are available directly from the companies that manage them, as well as through discount brokerage firms. Be aware that mutual funds typically require a minimum initial investment of anywhere from $500 to thousands of dollars, although some providers will waive the minimum if you agree to set up automatic monthly investments. Mutual funds can be purchased in any investment websites come trading platforms or can be opened with many different financial institutions, including banks. Cash management accounts and high-yield savings accounts provide higher rates of return than you'll get in a traditional bank savings account. Cash management accounts are best for short-term savings or money you need to access only occasionally. For example, an emergency or vacation fund. Transactions from cash management accounts are limited to 6 per month. If you're new to saving and investing, a good rule of thumb is to keep between 3 and 6 months worth of living expenses in an account like this before allocating more or the riskier investment products. Due to lower overhead costs, online banks tend to offer higher rates than what you'll get at traditional banks with physical branches. Cash management accounts will typically generate some interest. While this amount may not be extreme, it can add up, making it an appreciating asset. Whether you're shopping for a high-yield account at a new institution or are lucky enough to have one on offer at your current bank, it's always wise to compare options across the marketplace. Details that you will need to be concerned about are interest rate, required initial deposit, withdrawal of money, and the fee. Differences in interest rates and fees can add up over time, especially if you're keeping a relatively large balance in savings. If you get inspired by this video, please like and comment on this video. Subscribe to our channel so you won't miss out on any of our videos. See you next week.